Hello, welcome to Judith Barnett Sells Homes, and today the topic is going to be 1031 exchange. I had a 1 hour interview with Mike Wittstock, whose video you saw earlier at the class that I took, and now he is personally chatting with myself, answering my questions and questions that I think my clients might want to know in regards to 1031 exchanges. So we get a more in-depth opportunity to talk with Rick and find out what he knows, kind of pick his brain a little bit today. So we are on, and thank you so much for taking time out of your schedule to do this today. I truly appreciate you for that.
Absolutely. Anytime. It's good for both of us.
There are just certain things that I would like to know as an agent, and then obviously as a person who has rental properties. And, funny thing, Rick, I don't think I even knew anything about 1031 exchange until just a few years ago. It wasn't something that real estate agents really even talk about.
No. Well, there's a joke. It's like it's the most unutilized tool in the real estate agent's pocket. It's something that is there. Some people are aware of it and some people are not. But using it is the intimidation part if you're not familiar with some of the facts or some of the timelines. But
Yeah.
overall, it's amazing if once you do get familiar with it. And if you're working with investors, it's a no-brainer to have that knowledge for sure.
Yeah. Funny, I started looking into real estate many years ago, read the Rich Dad, Poor Dad book,
All
and
right.
he's, all about real estate as your, foundation investing and growing wealth.
Right.
And I do not remember anywhere in there him talking about 1031 exchanges. I just never saw it. It was always take what capital you can from the properties and reinvest it into another property, but he didn't talk about how to do that without paying capital gains. And
Right.
now that I know what I know, it's like that really was a huge component that he forgot because
Right.
otherwise you're going to be paying capital gains even if you're investing all that money again, you know?
Right.
So I was like, huh. So it's been enlightening. And I guess, is there a reason that it's not really talked about a whole lot? Is it just because it's scary? Is
It's
there?
well, it's scary to a point, and it's a lot of people don't think about what they have to pay in tax when they sell a property. Even primary residence, you don't necessarily think about the 2 out of 5 year rule. It's like, oh, this is how much money I'm going to gain from the property. And they figure that out later for the most part. And of course, later there's surprises that could hurt financially, not knowing that information. But I've been
True.
educating people on this for decades. And I mean, even the people I educate forget the details on it because you may only do maybe 2 or 3 exchanges as a real estate agent a year. If you're working primarily with investors, you might do a lot more.
Mm-hmm.
But
Mm-hmm.
like I say, it's something that people just don't think of. Like even when you watch those fix and flip TV shows,
Right,
they
right.
don't talk about how much you have to pay in capital gains tax or
Yeah.
tax in general. If they're not paying capital gains long term, they're paying ordinary income tax. So that sometimes that
Right.
30,000 is not really 30,000 when you go to the.
Yeah, that's so true. So true. And you're getting my brain kind of like cooking on some other ideas. So I'm trying to like listen and not jump ahead
No,
because
no.
I want to take it. I'm glad this is recorded because I want to kind of, I'm sure I won't remember everything, but it is something that is more relevant to me and I will remember for the simple fact that I and my partner both have investment properties.
Right.
And funny thing is that right now NAR is bringing a policy to the table in Washington asking to change the capital gains like allowance for singles and married people because the value of properties have gone up so much that a lot of people, especially people who've been in their homes for a long time, they don't have a mortgage, they maybe
Right.
been there 30, 40, 50 years, they have capped out. They're going to have to pay capital gains on their home.
And
Right,
so they're looking at changing that to hopefully 500 for single people and 1 million for couples. And that
right,
makes sense to me because even looking at my own property, if I pay it off, I'm going to be paying capital gains because I'm single, I'm not married. And
right,
so I'm like, that would be really good for me. I'll still have to pay capital gains, but it won't be as much, you know.
right. Yeah, and that's a good point. It's something that they talked about raising those numbers for some time now.
Yeah,
And hopefully we have a positive outcome because there is a lot of people that are in their retirement years and they don't want to sell necessarily that property or they need as much money as they can to go into assisted living or whatever the case is. And
exactly.
still have to pay that tax no matter if you're retired or not. So having that exclusion
Exactly.
rates, yeah. So
Yeah. And so, and they're saying that actually that's keeping people locked into their homes because of that capital gains tax.
right,
So just again, understanding taxes and real estate is something that again is not talked about a whole lot. Everybody wants to know, well, how much will I get when I sell my house? Because then I'm
right,
going to buy another house, etc. And if you are an investor, again, I've never really heard anybody talk about it. My partner sold a property, couple properties, and I said, did the mortgage lender, anybody talk to you about 1031 exchange? And he's like, what's that?
right. Yeah,
So, and I had a gentleman in my neighborhood here that he has a property in Minnesota that his family has been living in and maintaining and improving, but pay him rent to live there. And he wants to sell it in a couple of years so then they can move down here and he'll buy another property for them to live in down here. And I said, do you know about the 1031 exchange? I said, otherwise you're going to have to pay capital gains tax. And he's like, what's that?
right.
So I did give, this was before I met you, Rick. Who knows if
Sure.
he still has the information I shared earlier, but I will definitely share your information when he and I chat again because that's somebody who would benefit from doing the 1031 exchange because he is selling to buy another rental property.
That's exactly what it's created for. So, I mean, he's the ideal candidate for it. But we all assume that as real estate agents or as loan officers, even as title companies, we just assume that your investor is savvy enough to get that information from your tax advisor. And you know how that is. Sometimes
Hmm.
they do it after the fact, and then it's too late. I mean, like I
Yeah.
said, our class I had with you, that this comes up a lot, and we don't like having that call after the fact. It's like, well, it's too late, and they find out that they have to pay 30, 50, 100,000 in capital gains tax. Now what? So
Wow.
that's,
Yeah.
yeah,
Yeah.
you find out sometimes the hard way. And
Yeah, for sure. Well, I know that my partner did. And he's like, I said, so in the future, if you have to sell anything, we need
yeah,
to look at like property and try to not have to pay capital gains. So let's kind of, for people that may be watching, and then we can break it down and we can maybe come up with an outline. But because I didn't recorded your whole class, that was 3 hours, and I don't want to make torture people for three
all
hours.
great jokes.
So I wasn't tortured, but if you don't want to, need to know this for a class,
But for
let's
watch on,
try and
yeah,
expedite this. So if a person has an investment property, and I'm going to keep it simple first, and then we're going to walk through some examples, and you can tell wonderful stories. So I love to hear a story that might fit the
absolutely.
scenario as we go. You had
So yeah,
funny
so
stories. I
thank you.
want you to know that you are getting a lot of attention on Facebook and Instagram from our
Oh,
reels
good.
posted. We got over 1 million views on one of them. I'll have to send it to you.
Yeah, absolutely. I love to hear that stuff. That's great. So, I mean, you want to just kind of run over what a real example is or something like that?
Well, here is kind of the most basic, which would be my gentleman in the
Yeah.
neighborhood here.
Mm-hmm.
He's going to sell his property that's an investment property in Minnesota and
Right.
buy another rental slash investment property here for his family to live in. Again, there's another add off on that, but we're going to come back to it because I know there's scenarios. So very straightforward. One investment property, to another. When should they start talking to a 1031 exchange vendor?
As soon as possible. Like I say, it's the information is very important. So if he's even just thinking about doing it now, talk to someone like me, speak to their tax advisor, get that information up front because it has a lot to do with what your decision is going to be. If you have to pay extra money to capital gains tax, that's less property that you can buy in Arizona in that example. So you need to
Right.
know that information so you know what you're going to qualify for and buy on the other end. And then so a lot of those initial questions like what is like kind, what can they buy, all that would be handled up front whenever they're just thinking about it. And then there's the other option that maybe your client that has investment property that he is collecting rent, but maybe there's another property that needs to do some planning on setting it up to be a rental. So when they do go to sell it, they qualify for 1031 exchange because then there's a wait period that they have to have at least 1 year rental history to qualify for that property to be an investment property. So
Okay.
yeah, so with the Minnesota property, like kind, I don't know how much he's selling the property for, but we'll say what, 350 maybe?
It's going to be, we looked and it's probably going
Yeah,
to be closer to 500,000.
perfect. So 500,000. Mechanics of it, straightforward. You sell a $500,000 property. You go minus commissions and closing costs that he has to pay there for that closing. Net sales price 480. So now that's his target number that he has to find and replace in Arizona or wherever he's taken that replacement funds.
Okay.
Yeah. So
Okay.
it can be another replacement property, residential for 480. It could be a fixer upper maybe for 300,000, and then he does improvement exchange, and then he fixes up the difference there with the remaining money. I
Oh,
don't know
really? Talk about that for a minute. An improvement exchange. Oh, yeah. You already like threw in another little caveat. Thank you.
little nugget in there. Yeah, the improvement exchanges are probably super popular right now because of the market. You
Ah,
might find a good deal that needs a little bit of work on it, and where the market's a little bit slow, there's less buyers in the market. You can buy that property with using an exchange. It's a little different with than it is with the normal delayed exchange because it costs a little bit more. But if you're saving thousands of dollars, it's not that big of a deal. So in that example, 480, he finds one for 380. Keep it rounded off numbers. So he's
okay.
got $100,000 left over in the exchange. What's he going to do with that $100,000? We would hold it under the reverse improvement structure and we hold it up to 180 days to do all of those improvements on the property. So he just draws on that money as he needs it to do those improvements.
And they have
And
to be
then at
done in
the end,
180 days, though.
the 180 days is a
Okay.
strict rule, yes. But
Okay.
with an improvements, if it's like, maybe a kitchen remodel, bath remodel, things like that, or maybe even adding a pool, some of those things can be accomplished in 180 days,
Sure.
but 180 days to build a property from ground up, that's a little tight. Yeah.
Yeah. Yeah. That's not going to happen. That used to happen back in the day, but that does not happen anymore.
Yeah, we're talking about updating the tax code. That might be one they need to update is on the improvement exchange that they extend the time a little bit longer than 180 days.
Yeah.
Do a
Yeah.
new build,
Well,
that's impossible.
the other thing in saying that about the improvement exchange is that you are probably, most of it, if it's a lot, you're going to need to hire contractors to do the work. Is that a requirement or can
No,
it be a DIY?
it can be DOI. It can be
Okay.
any, yeah, the IRS doesn't care. They just want to see the money going towards that improvement property or that replacement property.
Okay.
So
Okay.
it could go to your own self to do the materials and build it yourself, or it can go to a general contractor, whatever, as long as the value and the money's going towards that replacement property.
Okay. Okay.
Yeah. So it's
Cool. That's an added little
super
twist.
cool right now.
Yeah.
Yeah.
Well, for sure, I really do like that because
Yeah.
again, a lot of properties are selling for a really good price. And if you can get a decent property and
Yeah.
use some of that money to do the work, that would be fabulous. I mean,
Yeah.
why come up
Tax-free
with
money,
more
right? 'Cause
cash, you
it's
know?
tax-free money that's gone through the exchange. So
Right.
that's the beauty of it. Yeah. I mean, I have clients, that's how they use their business model. Like we won't call them fix and flippers because they're usually 2, 3 month time frame, but the buy and hold sell model where they buy, hold,
Right.
sell, buy, hold, sell. That's their avenue right now is they're using these reverse improvement exchanges because to
Oh,
get equity quickly is the what I call the lipstick and rouge that you put on the property. You know, update the kitchen, update the bathroom, maybe a new roof. If there's some maintenance that's been deferred,
right,
then you're
right.
buying a good price property, but even when you're finished with the money you're putting into it, there's still going to be maybe 10, 20% or even higher on the value of the property when it's completed.
Right, right. Okay, I like
So
that.
it,
That's
yeah,
great. That's another piece I didn't know. That's good to know. Well,
yeah,
especially for investors that are like, I'm selling a property that's maybe worth, 500. The difference between I bought and I paid, I can buy another property for X, make payments, but I'd like to save some of the money to do the improvements.
right.
And a lot of the investors I know, even if it looks nice for a buyer, like I'm going to live in it, it's fine, it's
Yeah,
okay, I'll just do it as I go.
right.
They come in and they gut it. They're like, "Psh, we're going to redo the kitchen, the bathroom." I mean,
Yeah,
they just come in and just redo it. And it's like, it's nice for them to have that money in the exchange to do the work. They're still ahead of the game. So, say 4, 5, 6 months down the road, they're ready for it to go on the market. They haven't used any of their cash out of pocket. Does that make
right.
sense? I mean,
Yeah, no,
that's the way to
absolutely.
go. I love it. I love that.
Yeah.
I
I
love
mean,
it.
it's just wish I could just broadcast it to the world and
I
just
know.
show
I'm
everybody
trying
what.
to help here.
Yeah, I
I'm
know.
trying.
It's just it's people don't understand it, and then they don't realize what the real benefits of it are. And I mean,
Right.
and like we say, and I mean, maybe there should be a TV show called Fix and Flip 1031 Exchange.
I know.
'Cause-
Let's do it. Let's
yeah,
do it. I
exactly.
love it. I love it. Let's do it. A 1031 exchange, fix and flip. You
Yeah.
got it. Save, kick the can down the road as far as
Down
you
the road
can.
and look at this money. I mean, other countries do not offer this. So it's something that they put in the tax code that is a big influence on the economy. So it gives incentive, like you were talking about earlier. NAR
Yeah.
is trying to raise those limits on primary residence.
Yeah, for sure.
Those people are not selling their houses if they have to pay huge capital gains tax. So
Yeah.
anything that helps with that, as long as they're keep investing, that's going to be stimulating the economy. So it's a good thing all the way around.
Absolutely, absolutely. So, quick question going back to family renting. So, you buy a property and you rent it to family. You're helping out your cousin, your kids, whomever, and you're renting it out. Now, I remember in the class you said that it has to be rented out for a certain amount of time at current market rates. Can you
Right.
talk about that a little bit?
Yeah, so its current market rates are, whatever you find on the MLS or whatever you think is within reason. But family members, a lot of, I mean, it might start it off that you bought a property for your college-bound daughter or son, and you bought that property. They got roommates. They rented out the property. You're collecting rent from your daughter or son. That's a true rental property in the IRS's eyes, as long as you're claiming that income and doing a Schedule C or E on the tax returns. So the benefits of that is that when they go to sell, when the daughter or son graduates, they can take that funds, sell that property under exchange, not pay capital gains tax, and maybe help them find their first home and then continue to rent it out to that family member. But
Right.
what's fair market value? Like you say, look at the MLS. If the going rate is about 1,500, as long as you're within that ballpark, because you can minus some of that rent, that gross rent on return labor. So if they're
Oh, you
maintaining their
can. Okay.
property or they're mowing the lawn or they're doing whatever else that has to go with the maintenance that is avoiding you taking outside of the family member,
Oh,
that could be discounted on the rent. Again,
okay.
all this has to be disclosed in your tax return, but that's a great way to invest, help out a family member. I mean, I have one
Mhm.
client, I'll tell you, I don't know how much time we have, but I'll tell you this story
We
because
got an hour. We got time. We're good.
this one's an amazing story. This was a client a few years ago. I don't think I told this one in the class. He's very wealthy individual. Probably, I would guess he's in over 90. I know that for sure, but maybe around 92, 93 years old. He donated a lot of money. He's doing a lot of estate planning. He donated a lot of money to charity, but he has all these billboards on the East Coast. I think he had over 30 billboards,
Oh,
and they were all bringing in six figures a year. Very profitable billboards. And so
nice.
this is the part that people don't understand. Like kind, those billboards, he owned the easements that they were sitting on off the freeway. So he owned those easements, which mean they're real property that he could sell those, do an exchange, and then go off and buy a single family rental property. So what his motivation was, not so much for the money, he was doing more estate planning for all of his heirs. So his
Ah,
kids, their kids, and their kids. So like 3 or 4 generations down, he was selling those billboards, doing an exchange, and buying homes for family members that he's going to rent out or the trust was going to rent out to them. So when he did
ah,
pass on, every one of his members, even if it was a 2-month-old baby, was going to have a
a
home
house.
that they would receive in their inheritance.
Oh
Isn't that
my
pretty
God.
cool? I
That
mean,
is so cool. I love that. I love that. And people don't think about that. And
no.
these days, it's really actually a great way to get a house to your family
Mhm,
without anybody paying taxes and capital gains and inheritance tax or anything, is
mhm.
that you gift them the house, so to speak, but you pay rent. And when
Well,
I die, you
yeah,
get the house. And
right,
what you do with it when I die is on you. You can live in it, you can sell it, you can do whatever, but they're not caught in that tax issue. You
right.
kick to that tax issue down the road enough that it's just really, unless they hold it, we'll come back to that,
Yeah, yeah,
then if they inherit it and keep it, or they inherit it or sell it, if they sell it right away, they don't have to pay taxes, at
right.
least in Arizona. But
Yeah,
if they
much better on that.
inherit and hold it and live in it, and then eventually, like the example, the multi-million dollar one, that
Right.
one got so many hits. I gotta tell you, they love that story. Like, what the hell?
Yeah,
What's
yeah.
wrong with you? But uh, we won't. But that would be, if you hold it, you have to think about, and again, this is where you would talk to a 1031 exchange person and say, okay, should I keep paying rent? What should I do with this property so I don't have to pay capital gains down the road
Right.
on this?
I mean, it's
You
it's
know,
just as simple as that. Just getting the information, have a plan that is set forward, not just pass it on, say, oh, I'll just let my kids deal with it when I pass on.
right, right,
I
right.
mean,
That's
we
not
all know,
okay.
we all heard the horror stories. We all have friends or something that's gone through probate that don't talk to their siblings anymore or don't talk to their
Well,
uncle,
yeah,
whoever family member, because they fought over money.
right.
So
I'm an
estate
example
planning
of
is,
that.
yeah, yeah, me too. I
Totally.
have
I'm
my
like,
family as well. And it's probably in a lot more families than you want to say, but with what you're describing was called the stepped up basis. So basically stepping up the value on your inheritance, whatever it is when you receive it, you can sell it, like you said, and not have to pay any of that back taxes. So
cool.
the tax dies with the state or dies with the person that owned the property, the parent.
Got it. Got it.
Yeah. So that's a
Got
good
it.
thing
For
because
sure.
it came out in 2015. So let's keep our fingers crossed that that stays because that's
Yes.
really good for a lot of people.
Yeah, for sure, especially in inheriting. I mean, that's such a gift. Question, so going back to owning property as a rental and talking primary residence now. Now,
Yeah.
I think I asked you this question. I know I asked somebody. I have a property that is a rental currently.
Right.
And if I moved into it and lived in it for 2 years, I can claim it as my primary residence, but I cannot claim it as a rental and take advantage of the 1031 exchange. Or can I? Or is it the reverse? If I live in it for a couple years and then make it a rental, can I use both? Can I take advantage of both?
Not both, but you have a choice. You could either use the primary residence exclusion because you got 2 out of the 5, or you can do it 1031 exchange where you buy another property and deferring it because you got 2 years history there. So you can't use both tax codes in that
Okay.
example. There is some that you can use both where you're selling a property that's a mixed use property. I think I talked about this in the class. But and to clarify that last question, you'd have to pick which one's best. And the only time that it probably would go 1031 exchange is if they're over the exclusion number. So primary residence, single 250 currently, and then
Right.
500,000 married jointly. If you're over that and you've been a rental for the last 2 years, you might want to use the 1031 exchange.
Ah, okay.
So
But if
you
I'm
have to
in
wait.
it, Right, but if I'm living in it currently as my primary residence, I can't do a 1031 exchange.
You can
Oh, really?
if you got the 2 out of the 5. So if
Oh,
the last 2
okay.
years you were claiming as your primary residence, but on year 1 and 2, so you're on year 4 now. So your first 2 years is a rental, third year, fourth year is primary residence. You qualify for either one, and that's you just
Oh,
have to weigh out the pros and cons, which one's better for you. I mean, of
okay.
course, if you're married filing jointly and your gain is less than 500,000, no brainer, just do the primary residence exclusion because you don't have to deal with any timelines.
Got
But if
it.
you're making 800,000, you may want to consider doing a 1031 exchange because then now you can defer the whole thing into the next property.
Okay.
So these are things that come up in conversation
Oh, yeah.
up front, but not at the end, because at the end it's a little bit more scrambling, a little bit more stressful, and then people don't end up doing anything then other than paying the tax,
Right, right.
which is
So,
not too bad, but nobody wants to do that unless you
no,
have to.
no, we don't want to pay.
Yeah,
Sorry, Uncle Sam,
we
but
don't
we do not want
we
to
don't
give
know
you
where
any
Uncle
more of our
Sam's going to
money.
yeah, we don't know where it's going to go. It could go in a hole somewhere and never see it again. So
Yeah, I want to have control.
exactly. So
So, yes.
yeah, so there's those options, and a lot of estate planners use this as a vehicle to help people get into that situation. So where they can help with estate planning, so that their heirs are not going to probate court and fighting about the property. So yeah,
Right, right. Okay.
Wasn't that great information? Rick is just so knowledgeable about 1031 exchanges. And as I said in the video, I didn't know anything about 1031 exchanges up until a few years ago. And it is such an important tool in a realtor's toolkit to work with their investors and people, even if you only have one rental property, to save paying capital gains. So come back, like and subscribe so you'll get to see part 2. Thank you. And again, Judith Barnett sells homes with My Home Group Realty.